Good afternoon, everyone. Welcome to this Spotlight on InsurTech webinar, organised by Ditto, the marketing, business development and communications company for the financial services sector. My name is Michael Imeson, and I'm a senior content editor at Financial Times Live, which is the FT's conference division. I'm also a chartered member of the Chartered Institute for Securities and Investment, which is abbreviated to the CISI, and I'm the deputy chairman of the CISI's FinTech Professional Forum. Joining me here today for this discussion on insurance technology are 5 experts from the insurance industry. Representing different parts of the industry, we have a big consultancy firm, 3 InsurTech startups, 2 providing technology solutions to insurance companies, and 1 providing insurance policies direct to consumers, and a big, long-established insurance giant. So first, we have Dietmar Kottmann, who's an insurance partner for EMEA at Wyman, the management consulting firm which specialises in financial services. And Wyman is the lead sponsor of the world's biggest insurance technology conference, InsurTech Connect, which will be held in Las Vegas next month. Dietmar, who's based in Munich, is the co-author of the firm's InsurTech Radar report, which tracked more than 1,800 InsurTech firms globally. Then we have Elizabeth Marvan, who's the co-founder and CEO of Rhisco, a technology and consulting startup providing risk management and capital management technology services to insurance companies and banks. The company was set up in 2010 and is based in Canary Wharf, London, with offices in Mexico and a new one opening soon in Brazil. And Elizabeth, who's originally from Mexico, has an impressive background, having worked in risk management, regulatory and risk audit programs for Scotiabank, Deutsche Bank, Citigroup and Algorithmics. Next we have Harry Franks, who's founder and chief commercial officer of Zego. Zego is another InsurTech startup, providing flexible commercial insurance policies focused on the growing freelance economy, also known as the gig economy. Harry has worked in ultra-growth tech businesses over the last decade in the US and the UK. In the last 2 years, he's taken a fledgling idea and built it up into a team of 56 people in London and is about to launch operations in Ireland. Then we have Jeremy Wood, founder and CEO of Legerity. Legerity is another insurance technology startup, providing software from its FastPost platform, which is in the cloud, and it helps insurance companies comply with all the latest accounting rules, such as IFRS 17. It also provides accounting software to companies in other industries, such as telecoms and leasing. The company is based in Paddington, about 50 yards from a new Crossrail station. Jeremy is a serial entrepreneur, having set up several software firms over the years and sold them on. He's a past winner of EY's Entrepreneur of the Year award. But what really impresses me about him is he's got a degree from the University of Bradford, which is where I've got my degree from. And fifth, but by no means least, is Rudi Damhuis, who's Director of Risk Analytics and Asset Modelling at Legal & General, the UK FTSE 100 insurance company, an asset manager founded in 1836 and based in the city. Rudi, who's originally from South Africa, has over 20 years' experience in risk system innovation, in investment banks, central banks, asset managers, hedge funds and stock exchanges. In the last 8 years, he's focused on the insurance sector, and he's particularly passionate about driving business and technology innovation. Now, I'll just say a few words about the topic and then hand over to the experts. Now, I think there are 3 main things happening in the insurance industry today. The first is regulation, which is seemingly never-ending. At the EU level, for instance, there's Solvency II, which has been in force now for a while, I think, the EU's General Data Protection Regulation and EIOPA's 4th EU-wide stress test for Europe's biggest insurance companies. That's just been completed. And then there's everything that's going on at member state level as well. The second big thing happening is market disruption, customer demand. Digitally clever new entrants are coming into the market to challenge the long-established firms for some of their business, providing customers with innovative products and delivery channels. And the third thing that's happening is innovation in technology, which is being used to amass and analyze big data and drive all aspects of the insurance business. And this, of course, is the subject of our webinar. Now, Investopedia is a great resource. If you don't know anything about a topic, you just Google it and up it pops. They quite usefully define InsurTech as the use of technology innovations to squeeze out savings and efficiency from the current insurance industry model. Obvious, really. But the key thing about it, from my point of view as a journalist, is that while many long-established insurers are embracing InsurTech, many are not, and they're being challenged by new technology-based startups. And if you want to read a bit more about this in a very easy, readable format, McKinsey & Co., they've done quite a bit of work on this. And I can recommend a study that they published last year called InsurTech, The Threat That Inspires. And that's all about traditional insurance companies under threat from new entrants who are using technology to eat into their customer base. On the other hand, some of these startups, these insurance technology startups, they're partnering with the big insurance companies, so each complement each other. So it's not just a question of competition between the two sides, there's cooperation as well. Now, the format of this panel discussion is as follows. First of all, each of our speakers is going to introduce themselves and their own InsurTech story in 1 or 2 minutes. Then I'll ask them some key questions and some supplementary ones as well. You as the listeners will be able to ask questions as well via the webinar site. It should be clear on your screen how to send questions in, so please do so. And towards the end, I'll ask a few of them, and then we'll wrap up with some concluding remarks. That's it really from me. So let's start with Dietmar Kottmann from Oliver Wyman. Dietmar, can you please tell us about yourself and your InsurTech story in 1 to 2 minutes, please?
Yeah, thank you, Mike, and sorry for my voice today. So actually, most of the work that we are doing in the InsurTech space is happening at the interface of InsurTech and traditional companies. I'm in fact at the moment sitting in an accelerator space, and there is just a CEO of InsurTech 20 yards from me and a representative from an incumbent just sitting next to him. But I don't want to bore you with that. So I think the most relevant piece of today is the InsurTech Radar series, which is a series of analysis that we launched in 2016 that not only basically reports about the developments, but actually thinks about what business models in the InsurTech space exist. We identified 19 for our latest report, and we did a strategic assessment. And if you then compare the strategic assessment of each of the categories versus the activity, you actually see where there is opportunity or where there might be overcrowded spaces. And I'm very, very pleased that one of the areas that we identified in our last report as at the moment having additional potential is the area of balance sheet and financial resource management, and that we have today 2 other participants coming from exactly that business model category.
Okay, thanks, Dietmar. Elizabeth, can you tell us about yourself and your story in insurance technology?
Yes, sure. Thank you, Mike. Most of the team in Rhisco, including myself, have spent many years establishing risk programs or integrating technology to resolve regulatory demands. In particular, when we started implementing Solvency II in 2013, it gave us a lot of insight into the gaps or the key points that technology components weren't solving at the time. For us, the main one was data management. For example, for attending processes for risk and solvency capital calculations. So we decided to build Tegra, that is a platform for data management, integration, and aggregation.
Sorry, Elizabeth, could you just say the name of that platform again? I didn't quite catch you. I've seen it written down, but for our listeners.
Sure, it's Tegra.
Tegra, okay.
Tegra, yeah. This is a platform for data management specifically that also has services for integration and aggregation. And the purpose was to give the user, the business user, benefits like independence from IT, the ability to run on-demand analyses that are based on rules, or even the ability to rerun historical processes also on demand. So that's kind of the things that we were seeing at the time that weren't addressed by technology. So that's why we came up with this product. We have also engaged quite a lot in business partnership with other technology providers like IBM and Julia Computing, and more recently with Neo4j, and now also with Legerity, who is also in the panel. And the purpose for these partnerships is to build end-to-end solutions to solve better the client's needs in this regard.
Okay, thank you. And Harry.
Hi. So I founded Zego in 2016, and really I came at it from a consumer side. So started the business in response to some of the challenges that I saw firsthand from the way in which people were actually consuming insurance versus the way it was being supplied. So I think that the changing models that people are now working in, whether that's part-time, freelance, multiple types of company, be it that in the course of a year or indeed the course of a week or a day, means that traditional block insurance policies were just not fit for purpose. We're no longer living in a world where it's as binary as that, where you are one thing or another. So we created a platform that allowed us to really understand exactly what someone was doing and when they were doing it, with a view that then we could create the exact type of insurance policy that they need for the exact work that they're doing at the exact time that they're doing it, and they only pay for what they actually use. So we're a team based in London. We're 56, operating across the UK at the moment, about to launch into mainland Europe. And we're really focused on making insurance simple, fit for purpose for individuals, micro businesses, and moving into the business space as well, and doing it so that we can empower individuals to do more with an infrastructure of best practice around them.
Okay, thank you, Harry, and over to you, Jeremy. Tell us about Legerity.
Okay, well, thanks, Mike. So, Jeremy Wood, CEO at Legerity. As Mike said at the start, I'm a bit of a startup guy. This is my 5th startup. I was lucky enough this year to be recognised for my 5 startups and the work we're doing at Legerity with an award at the UK Enterprise Technology Awards. It's actually called the Evergreener Award. So you have to be of a certain age. So my first point is you're never too young to start. So it's nice to be associated with InsurTech. So Legerity, we're a software house, and we provide a modern cloud-based product. It's a specialist product. It deals with accounting rules, and it allows firms to deliver and meet new accounting change. Our particular specialism, and I guess our sweet spot, is dealing with complexity. And the new accounting standard in the insurance sector, IFRS 17, has to be adopted by 2021. And having sold systems into the finance sector for the last 30 years or so, I can honestly say that IFRS 17 is the largest change that has hit the back office in insurance in a generation. It is massive. It's a global standard. It impacts over 450 insurance firms around the world. Some of these firms will be, like Legal & General, like Prudential. These are massive firms with multiple locations. It's a risk-based accounting standard, so it bridges both actuarial and finance, which has tended to operate it separately. So it's complex and costly to implement. So firms like Legerity, it really is a perfect storm, because insurance firms are suffering from significant historic underinvestment in back office systems while facing with this complex new regulation with very tight timelines. And we're a big proponent of InsurTech, and we think that if the back office can start to look at some of these more modern technologies coming through, it will make a massive change to their programs.
Okay, thank you, Jeremy. And finally, Rudi.
Thanks, Mike. Yes, so as per the introduction, I'm from Legal & General, and Legal & General, of course, is a multi-line product insurance provider, not only doing insurance, but also asset management, equity release products, etc. So quite a broad range of products. In my capacity at Legal & General, I'm responsible for the running of the internal model, which also looks after the asset modeling, and we're also responsible for the development of the internal model, which is now a blend of a third-party tool and a fair amount of internal development that we've done over the years. Personally, I've always been involved in that space, which is the space somewhat between the business and technology, and that is the space that InsurTech, of course, is very much playing to. From a Legal & General perspective, I think we've got a very healthy culture and sound governance around our key systems and our processes, because, of course, we have to protect our customers and our stakeholders, but we also have a very healthy culture of allowing for rapid innovation of new ideas and technologies, and even start buying some of products and services from InsurTech companies across the industry. And personally, I think my InsurTech experience has been very positive in the industry over the last 8 years. And I've always spotted a very healthy and happy appetite for companies to want to reconnect with their customers, re-platform legacy systems, or innovate something completely revolutionary and brilliant. And we'll get more into that a little bit later on, I'm sure.
Okay, Rudi, thank you very much, and thank you everybody for those introductions. Quite a variety of experiences and services represented around the table today. I've got 2 key questions for our panelists. And the first one is this. Why is InsurTech so important to the insurance sector as a whole? Not just your own company. You've been talking about your own companies. Why is it so important to the insurance sector as a whole? And what opportunities does it bring? And I'd like to ask Jeremy to answer that question first.
So thanks, Mike. So as I explained, our involvement, is very much from a back office, and as I guess generally, InsurTech or FinTech tends to drive innovation at the front end more than the back end in terms of firms. But however, we think that InsurTech is important, and it can make some massive differences to firms when they're looking at these new change programs. And we think it can be an integral part of a compliance or a regulatory initiative. So IFRS 17 is once in a generation change, and firms have no choice but to adopt these standards. No one likes paying for compliance. So if you are going to have to meet compliance, then in our view, if you can turn it into a business benefit, as well as meeting, your regulatory requirements, then it really is something that you should be embracing this opportunity and deliver. We actually call it compliance plus. And if you can do that, you could take a step over your peers and maybe gain some advantages. Yeah. So we think InsurTech is a core part of enabling change.
Yeah. Jeremy, specifically on what you've developed for IFRS 17, if it's so important that your clients comply, why can't they just do this in-house? Why can't their in-house accounting or finance departments do it? Why would they need to outsource it?
Well, I think with any of these large programs, these firms have a lot on their plate. Certainly, as in any program, certain people will develop their own systems. However, we think, embracing vendors, embracing new technology, coming up with new ideas is the first step in making some massive change in the back office. So if you look at, there are solutions out there like ours, I'm sure there's others, but there's solutions that have invested heavily based on 30 years of experience. The new technologies are cloud ready, do use new techniques such as in-memory data grid processing, that can process things on demand, larger volumes, that are looking at things about blockchain coming through, Internet of Things. So all of these technologies are now out of the box. And the biggest change, I think, is that these newer technologies can be implemented in a largely non-disruptive manner. FinTech, InsurTech is large about disruption, but when you look at it from a systems perspective, these legacy systems, these big back office systems, policy administration systems are very expensive, very fragile. People don't want to change them. So dropping in, using all the new APIs, web services, cloud, gives them a really fast return on these complex programs.
Okay, that's good. That gives us an idea of a specific service that you're offering. But if we look at the macro view, I'd like to move over to Dietmar now, because Dietmar, Oliver Wyman, you did that big survey. So bearing that in mind, same question for you: why is insurance technology so important, and what are the key opportunities it brings?
If you think about the horizons of innovation, there is a horizon one, which is more or less very, very proven innovation. So you have a technology like some system that you can just integrate into your existing IT landscape, process innovations, and so on. This is what the insurance industry has been doing for the last 20, 30 years. And that already advanced the industry. But I think when you look today at the insurance industry, it is not a technological leading industry. So it is important to have also what I call Horizon 2 innovation, where actually people dare to try out something which is more drastically new than just a little bit of evolution. Let me give you an example. You might have heard of Zhongeng, which is a Chinese InsurTech. They have actually written on a single day last year, namely on the Double 11 day, 300 million insurance policies in a single day, with a peak of actually writing 24,000 policies in a single second. That is something that I think most of the classical traditional insurance companies would never be able to do. And they are now not only doing that as a disruptor, they actually have built up a subsidiary called Song Technology, which is basically like an Amazon Web Services, which is actually offering their technology to other insurance companies. So we do definitely see InsurTech as a catalyst for more radical innovation, trying out new things, and if they are successful, actually helping the complete industry to advance.
Okay, thanks. I'd like to move on to Harry. At the beginning, Harry, you told us about your own company, but speaking more generally, what do you think are the opportunities that technology brings to the insurance sector?
Well, I agree a lot with what Dietmar just said, and Zongan's a prime example. You know, Zongan created all of those policies, and if you actually look at some of the specifics of what those policies written were, they're writing these because there's been a significant change in consumer demand. And I think this is where the InsurTech sector can really help, because we can better service these new customer segments that just didn't really exist some time ago. So, and I think there's an importance around speed, and that's what technology can do. It can allow us to iterate faster. But I also think, in my mind, it's not just speed, but it's also this concept of hyper-personalization, which technology has brought to the consumer today a level of choice that we've just never seen before. And as a result, we need to be able to service this and create products that are really fit for purpose. And if the results are, if you can do that really effectively, as Zongan is showing, then you can really give customers what they want, and they then come to you because you are servicing their new demands and their new needs, and this makes you relevant to your customers, and ultimately that's what every business wants.
Yeah. Okay. Thanks, Rudi. Same question for you. Can you give us your perspective on the big picture, on the opportunities?
Sure. I think from my side, I think there's been a lot of deregularization in the industry. So the deregularization of the annuity business has forced the consumer to become more self-reliant and manage their insurance and investment opportunities and their pension opportunities better. So they've moved away from DB schemes into DC schemes. They've got the opportunities of ISAs, SIPs, and other investments that they need to invest in. So the consumer journey has changed. No longer do they rely on a single employer and a single pension. They need to rely on multiple consumer journeys in order to get them the information that they want, so that they can make the decisions what they need. And I think that is picking up on several points that were mentioned before. We need to use InsurTech to keep abreast with the consumer demands of information and being able to come up with products and services that is relevant to the consumer. However, there's also an element of the low yield environment, which is driving innovation. So as yields are historically very low, we are, as an industry, we're forced to look at more innovative ways of driving yields for our shareholders and our customers. So we're looking at more esoteric and illiquid assets, which can give us the yield that we want. And these assets typically require a bit of a innovation in terms of their valuation and their pricing. So Monte Carlo simulation, etc., because there's no accepted market value that you can just pick up in the industry, and that is also driving innovation at a more back office and a more back office way. So I think the InsurTech will allow the industry to keep a pace with the consumer journey, but the low yield environment needs to will also drive the innovation, that especially around the illiquid assets. And the benefit of that, of course, is quite far-reaching, because the insurance industry, with a very long view horizon, not all of the investment money will go to the capital market, but will go into things like infrastructure regeneration or infrastructure development.
Okay, thanks. And Elizabeth, your take on this?
Yes, I think that the InsurTech has several elements that can really are very, very important. First and foremost, I think, is regulation. Because of the excessive regulation, there are finite resources in the insurers, both money and people. There are many new fintechs and many newcomers to the industry. So obviously, competition it's a point. It has a point. And finally, I agree with what people have said, consumers want all the benefits. They want the immediacy, they want everything fast, cheaper, nicer, beautiful, and ethical. So I think technology gives the means to try to accomplish all these elements, and it's not kind of a nice to have, is a must.
Mm-hmm. Well, thanks for that. I've got a specific question, Elizabeth, about your company, about the services that you provide to insurers. Can you just give an example of one or two of those services and why insurers would use you rather than their own in-house systems?
Yes, sure. Well, we traditionally have come from an implementation and integration of complex technology, covering all from data to processes, controls, and strategy. We also do quite a lot of bespoke development, complementing bigger technologies, either in-house or from third party, and do a lot of support on demand for highly specialized solutions. These mostly around risk management and capital management, including the financial modeling of things around risk or pricing models like the ones that Rudi mentioned. In general, the reason why clients prefer us is the first things that we come to understand what are the pain points, but not only that, but also why they cannot solve it. And then the way we address that is we define a strategy. So we bring a team, a small team, typically, but it's a very well prepared team. It's highly specialized and with a very open and holistic view. And not necessarily the problem is technology. The problem might be data. The problem might be even an organizational structure. So what we try to do is to try to, paired with the client, try to come to a solution that it is the right solution for them. Not necessarily using our technology, it might be somebody else's. And that's why when we have our bigger partners, bigger providers like IBM or others, it is really helpful to come to the client with the right solution, even if it means bringing on board somebody else. But that's why. Mm-hmm.
Fine, thanks. I've got a specific question as well for Harry from Zego. It always fascinates me how people learn about how people set up their businesses, how they get their idea, and then how they get the money to get started. So how did you identify a gap in the market? And then how did you persuade people to back you, these private equity or VC companies?
Well, I had the advantage of actually working in the industry before. I don't come from insurance, so my background, amongst others, was at Deliveroo. So I started to see very clearly the way people were actually trying to buy insurance and the requirements that they had versus the way it was actually being supplied. So I saw that.
These people being the scooter delivery drivers.
Yeah, absolutely. And if you then take that into the wider insurance market and the wider freelance economy, it's exactly the same. Products really designed for annual use and people wanting to use them on a very part-time basis. So when you peel it back and you look at the scale of that opportunity, it was one that was very obvious for us to go
apart from delivery drivers and taxi drivers, who else would be your customers?
So we cover all of the freelance workers in any type of motor vehicle, so from bicycles all the way up through taxis, vans, and we now do another 95 trades in other public liability lines, and we're now moving into micro businesses and SMEs as well. We're doing that in the UK and across Europe.
And then financing, how do you persuade a VC company or however you would categorize them? How did you get the money from investors?
I think you have to have a very clear route to market, a very clear vision of what you want to do, but also I suppose a compelling team. I was lucky enough to launch the business with two other very smart people, and so it was creating insurance products is great if you've got 10 years of past history, and that was one of our big challenges working with traditional insurers. But if you have a very clear vision and a competent team and a route to market, then people are willing to put their money behind you.
And are you able to name your investors? Is it public knowledge? Or?
Yeah, absolutely. So we took we've had a number of rounds, starting with Local Globe, who are one of the leading seed investors in Europe, and then more recently we took a round of funding from Bolton Capital, one of the I'd say, one of the big three European investors with a couple of billion euros under management.
Yeah, okay, thanks. Well, I've got some specific questions for our other panelists as well, and also again for Harry later on, but I think we should move on to our second key question. We've heard a lot about everyone being very positive about insurance technology, but there are barriers as well, barriers to its development, erected not just by the old school bosses of large insurance companies who are often resistant to change, not everybody, but a lot of people are, but these barriers are also erected by regulators and by customers who might be resistant to new ideas. So big question is, what are those barriers and how can they be overcome? I think I'd like to ask Dietmar that question. So Dietmar, how would you answer that question? What are the barriers and how can they be overcome?
Yeah, thank you very much, Mike. I mean, there are a number of barriers, but I actually want to, first of all, shed a light at one barrier, and I'm quite sure that my other co-panelists here will add to that. And the one barrier that I want to shed light on is that insurance is very often not something that people actively buy. So not a classical pull product like I now want my new Apple iPhone, and I'm very, very eager and I'm very emotionally invested in getting it. Insurance is often boring and dull. There are certainly exceptions, like if you have a mandatory product like motor insurance, there is pull, because if you buy your car, you need motor insurance, but very often that is not the case. And that means that many digital business models, which actually are based on finding genuine consumer pull and translating that genuine consumer pull then into traffic and into sales, do not work. And what you have seen at the beginning of the InsurTech development is that many, many business models were just copycats of e-commerce business models. And most of them then just ended up with unsustainable customer acquisition costs. That is now changing, and there are different ways how you can actually change that. So one is that instead of trying to intercept genuine pull of consumers, that you embed your offering into partner offers. So being an example earlier on. The second is that you actually find a mousetrap, which is not necessarily insurance, but something different, and then blend in insurance. This is, for example, also in the SME commercial space, where you can find a mousetrap in actually supporting a company with its HR processes or even with its internal processes. Gusto being a very nice example in case. So then basically selling a service to provide HR services and general management services to SMEs, and then selling benefit and B packages on top of that. And the complete way of moving from insurance to protected. So instead of just saying, I compensate you if you have a loss, to actually helping people to manage the risk and to prevent losses. So there are ways how to overcome it. But this lack of pull in many products that you have as an insurance company, this is certainly one of the entry barriers to be successful if you are not an operational startup providing something for players in the industry, but a consumer startup wanting to actually sell consumers a new proposition or to ease the distribution of a product.
Rudi, same question for you. You're in risk analytics and asset modeling, so the consumer aspect doesn't come into it. But do you get the right sort of support that you'd like to get from whoever your superiors are, or from the business actually? And are there any particular regulatory hurdles that could be put in the way by the FCA or the PRA?
I mean, we're obviously very, very, very regulated, and as a listed company, there's all the good scrutiny and ethics that goes with running the business on behalf of shareholders and customers. And I think it's important to strike, as a company, it's important to strike the right balance between good, solid, old-fashioned governance around particular systems and processes and maybe people even, and then of course a more agile way of doing things, agile in the sense of agile project management and delivering things in a more innovative, kind of more disruptive way. And I think the sweep that the agile project approach has done over the last maybe 6 or 7 years or so through the industry has helped at least challenging our thinking. So although we've still got some way to go, I'm sure, some way to go. That thinking has now started challenging our past ideas. But of course, you always need to protect your core systems, and that you need a lot of integrity around these systems. I mean, you can imagine that your internal model or your payroll system through which you pay your customers, or the main portal through which your customers access your their own data, that absolutely needs to be protected. So for me, at the end of the day, when it comes to barriers and the barriers that need to be overcome, it's a good, healthy company culture, one where there is investment and an appreciation in innovation and InsurTech. And of course, this can vary. This can be from somebody coming up with an innovative way of designing a new plugin or language into a pricing tool, or it could be somebody to try and come up with enough information or data how to calculate the risk of underwriting autonomous driving vehicles, or it could be a very large partnering with a fintech company to purchase their goods and services. So for me, it's the culture that really needs to be the first thing that allows for fintech to help.
Okay, thanks, Elizabeth. What obstacles have you encountered?
Well, I think that first from both the insurance sector side and also as service or provider to the insurance sector, I think the cash flow is always limited. It's a barrier in the sense of the possibility of having many new technologies that you would like to try or you can try, many new products that can be potentially good products for the market, but you cannot invest in everything. You have to choose. You have to really focus your research and development, otherwise money is just gone. The other one that I think it's a very important barrier, or that at least that I have seen, is that technical skills are not enough in people. We need as an industry, we need a new type of professionals. The soft skills become very important. The ability to learn and be creative, the open-mindedness, the ability to work in teams that have different backgrounds, not just technical backgrounds, but also a culturally minded backgrounds. If you forgive the incorrectness of that sentence, if you don't have people that really come from that angle, then you don't try, you don't dare. And as Dietmar was saying, that's something that we really need now. So it is very difficult to find that kind of professionals. Therefore, they are kind of scarce, and once you find them, it's not necessarily easy to pay the amount of money they are making. But I think that those are the barriers that I'd like to point for the team, for the public. Okay,
Jeremy.
Yeah, I think there's a number of good points there, and the ability, willingness to adopt innovation and is obviously a key part, but that's always married against delivering on projects and delivering on regulation. So if you look at our specific area, which is the back office, is the finance, accounting regulation, these are big multi-year change programs that have challenges around understanding what happens today, let alone what's coming down in the future. And they're typically, some of the challenges they have, a lot of these processes are fragmented, they're siloed, they have data quality issues. So again, I think, the ones that are going to be successful are those that can take a more joined up approach in terms of innovation has to happen. Customer demand, I like Harry's concept of on-demand insurance. We have a concept of on-demand accounting. Is the world ready for real-time accounting? Maybe not quite in the insurance sector yet, which tends to be very historic, but enabling these, or having the vision for front to back processes that do facilitate innovation, but with the controls right the way through to the back. And those are difficult things. People will be focused and will be targeted on delivering accounting change based on their understanding of what products are being sold and what the market wants today, but who knows what it wants in 2021. So the trick for us, and I think for insurers, is to use these newer technologies to future-proof themselves, not just from a front office and drive innovation, but also enabling innovation in the back office. So that's a key thing, and we think, you know, the technology sets that we're now using to deliver these, you know, modern generation solutions, you know, is the first step in doing that.
And finally, Harry.
Yeah, I agree with a huge amount of what's been said, and the barriers that you suggested in the title of the question. But I think where innovation sits within incumbents and where that sits on a P&L line, I think is also a challenge. You know, from us personally, we have a challenge that some of our products jump between commercial lines and personal lines in the course of a day. So whose P&L do we sit on was actually one of the biggest barriers we have to overcome when launching a new product. So where does innovation sit within a company's remuneration structures? And you then come up against that, if it isn't broken, don't fix it sort of mentality. I think there's a significant barrier, which from our side has always been tricky. How do you recruit for, maintain and manage a world-class team so that you can constantly innovate? You know, we are competing as the tech element of InsurTech with the likes of Google and Facebook to get the best talent in, to make sure that we are constantly keeping ourselves relevant. And to give you an example, one of our best developers had on his profile, please don't contact me about financial services or insurance. So when you're trying to get the best people in to make you as relevant as possible, how do you create a culture within the business that is going to attract the best talent and allow you to really maintain them and set them on the direction which is going to be the best for the business? And I think that cultural change needs to come from the leadership. It needs to come from the team, whereby your leadership sets an objective and you really allow your digital natives, the guys who really understand the power of technology, to drive the business forward. You don't set them tasks, you just set them the end goal.
Yeah, that's a good point. We have a question that's come in from a listener. It's actually more of a statement, and then she's asking, it's a question for Elizabeth, asking Elizabeth to comment. I disagree with Elizabeth. Regulation is not the key reason to enter the InsurTech arena. This may be true for reactive companies, but more proactive companies with fully fledged enterprise risk management programs, ERM programs, are way ahead of regulation. So Elizabeth, would you like to comment on that statement?
Yes, of course. I completely agree. I am not saying that regulation is the only, but I think it was the first element that forced technology, or not forced, but that technology could be used by insurers. But I definitely completely agree that the real benefit of using technology is to be able to compete, to be able to come to create new markets or have new customers. But regulation is the basic, is kind of first step.
Yeah, okay, thanks for that clarification. Now, I want to move on to one or two specific questions. We've only got about 12 or 13 minutes left, but I've got a specific question for Rudi, Legal in General. It's all about quantitative versus qualitative. Your approach to risk management is quantitative, collecting large amounts of computer-generated data, analysing it, and then creating models to help you and your colleagues arrive at the right decisions. But risk management also requires all these qualitative skills: gut feeling, value judgment, subjectivity. So my question to you, Rudi, is twofold. First of all, how much of your job has some sort of qualitative element? You don't just look at the statistics, do you? Do you have some qualitative element to that? And then when what you've analysed, your points, your stats, go up to the CRO, the Chief Risk Officer, and they have to make a final decision, how much of what they do to arrive at this decision is down to gut feeling, qualitative factors?
Yes. No, that's an excellent question, and I think obviously there's lots of different takes on how to see that. But in my view, I think it's the spectrum of risk management and building risk reports varies from the purely quantitative at the lowest level to something more qualitative and experience based at the aggregate level. So what am I saying there? I think if you build a risk report, of course you build them from atomic components, assets that you've got, liabilities that you've got, correlation between various factors that drive the behavior of those elements. So at the atomic components, we always strive for the highest level of accuracy. When you're building a pricing model for an asset, of course you have to have it as accurate as you can. But then you layer on complexity and complexity on top of that. For pricing, it's fine to be very accurate. Then you layer on uncertainty, so scenarios become less certain. The insurance industry especially the pension industry is very long dated. So you add on 40 years of discounting the expected value of money in 40 years' time, more uncertainty, and then you aggregate that, of course, with your risks on the liability side, which are driven by longevity assumptions, which are also equally projective in nature. But at the each atomic level, everybody tries to be as accurate as possible. Of course, when the report is then generated and is delivered to the CRO and other key stakeholders, of course, at that point, they know that the interactions between all these elements have created a very complex view of the portfolio. And in my view, I think that in times of high market stress or portfolio stress, the CRO is probably much more influenced by the analysis that he or she may ask to be performed, i.e., run me an analysis just after Brexit or just after a big market event to see what the portfolio looks like. After such an event, decisions are much more, I would say, quantitative in nature in their basis. But in normal times of lower distress of market volatility, it's the CRO's experience that he or she brings to the table, and having looked at that data over an extended period of time, plus, of course, the knowledge of the business and what transactions were executed during the last month or last quarter, that will raise the awareness so that they know which decisions they need to make off that. So yes, it ranges from really very quantitative to qualitative at the end of the process, depending on the situation.
Yeah, so there's still room for human judgment is still very important. We're not going to see the CRO and other senior risk managers be overtaken or replaced by robo CROs, are we? Robotic.
No, I don't think so. Not soon.
All going to be machine led. I've got a specific question too for Dietmar. It's about investment that's going into insurance technology. Private equity companies, venture capital companies, they're investing huge amounts in these startups. Then the long-established insurers, the incumbents, they're also investing a lot, but perhaps not as aggressively or as intelligently or as strategically as the private equity VC firms in the startups. Do you have a feel for who's the most savvy in how they invest their money? Is it the incumbents or is it the venture capitalists?
So in answering that question, let me first actually shed a light from a specific angle on it. I've already said or talked about the InsurTech radar, and in the German version, which we published end of last year, at the moment a French version is in the pipeline on top of the global version. We actually did a survey among founders and InsurTech CEOs. And there are a couple of really interesting data points which are highly relevant to your question. So the first one is that actually most of the InsurTech CEOs are actually seeing the highest increase of funding coming especially from corporate venture capitalists, both national but also international ones. But on the other hand side, they do not want that money necessarily. So only 19% of the participants actually are looking actively for money from primary insurance companies, compared to 61% looking for money from reinsurance companies. And the single most important reason behind it is that they fear if they get money from primary insurance companies as strategic investors, they might have difficulties in actually getting money in the next rounds from professional investors, as professional investors often have concerns that if you have strategic investors in a venture, that then there is a conflict of interest. And if you look at that data, that means that actually, yes, there is money coming in. And you do see that some of the large insurance companies, like for example Allianz Group, that they have definitely professionalized their venture investments in the last few years, now ending up with Allianz X, which has a very broad investment mandate, which I think is definitely on par with some of the professional investors. But that there has been a lot of money starting to flow into the InsurTech space in the last 1 or 2 years. And that certainly hasn't reached the level of professionalism like that you see from professional VCs or private equity founders, and also several concerns from the InsurTech side in actually accepting that money.
Okay, thank you for those insights. Yeah, very interesting. Now, we have a guest panelist. He's Gerard de Vere, founder of InsurTech Ireland, which is a community or a sort of association, a membership club for everyone in this sector in Ireland. And Gerard, he ran an event like this last week in Dublin, but it was a physical event in front of people sitting around a table talking about exactly this subject. So, Gerard, welcome. Could you perhaps enlighten us very briefly on what was discussed, the key points that came out of your event last week in Dublin?
Thank you very much, Michael. In Dublin last week, we talked specifically about how disruption and innovation in regulation, technology, and consumer demand were driving change in the insurance market and also in general business life. We had another really engaging panel, including Harry from Zego, who's on the panel today, and Elizabeth Cipieri, who is the head of business at Legerity. And we also had Brian Morrissey, who's the head of insurance for KPMG in Ireland, and Frank Whelan, who is the founder of Hunter Search Partners. He specializes in filling high-end in fintech and insurtech roles. So we talked about a lot of the same themes that I've heard today from the panel. Specifically, we focused on the transformation, on really the cycle of transformation into disruption and then on into regulation. And we talked about finding the right people to transform both startups and the established insurance companies. And we looked at how corporate cultures are having to change, both old and new, and on how that transformation can disrupt the established norms. Harry told us also about how quickly Zego began to achieve funding, which very much impressed some of the tech entrepreneurs we had in the audience. Yeah. We debated. Yep, go ahead.
Yeah. What about today's discussion that you've been listening in on here in London? Obviously, London's a bigger financial centre and insurance centre than Dublin. But has anything different come out of today's discussion that you didn't hear last week?
Yeah, I found it very interesting to hear the comments about the InsurTech radar looking at different InsurTech business type models and not just the traditional ones. That was something that I think came from the bigger scale. And just to say that we do focus very largely on the London market. Most of the Irish InsurTechs that we deal with are London market focused. I also would agree with Elizabeth's comments that the consumers do want all the benefits, including speed, reliability, and ethics. And I think the new technologies, especially the next level data analytics, can really provide these and deliver the bespoke cover that's really a new type of product to the industry. And then I guess lastly, it was just great to see that rather than technology challenging a 300-year-old industry like insurance, there's a great sense of cooperation and symbiosis between the new world of things like machine learning and artificial intelligence and the older world of incumbent and proven insurance practices.
Yep. Okay, Gerard, thank you very much for joining us. Well, we've almost run out of time, so I'd like to ask our panelists one final question, which is the same for all of them, and keep your answers brief, please, 20, 30 seconds or so. We'll start with Rudi from Legal & General and work our way along. Simple question, really. Rudi, if there's one thing you said during this webinar that you'd like our participants to remember, what is it?
Yeah, sure. So from my side, fintech is well underway, and everybody probably on this call is involved in fintech, whether they've started mining some data for a decision, or stood up a portal, or transferred a new infrastructure to the cloud. And for me, the most important thing is that we keep embracing fintech as a way of, in an orderly way, disrupting the industry where required, and making the large-scale changes where we need to keep abreast of our customer demands and our investment opportunities.
Okay, thank you. Jeremy?
Yes, I guess my takeaway is that, everyone knows innovation needs to be driven, and that is going to be largely client-facing in terms of new products. Just don't forget about the end-to-end process.
Okay, thank you. Harry?
I think when it comes to innovation, don't forget about culture. Most of innovation is going to come from the individuals that are working there. If you can create the right culture where people feel that they have autonomy and freedom to really try different things, then innovation will happen for the better and quicker.
And Elizabeth?
Yes, yes, technology is needed for compliance in the insurance sector, but definitely it is a tool that needs to be used to be able to compete and be able to provide the new type of customers all the things that they are demanding.
Thank you. And finally, Dietmar.
When we think about InsurTech, the first thing that often comes to mind is disruption. I think in reality, there are so many InsurTech business model categories which not only think about disruption, but actually about enabling and advancing the industry. And we have seen a lot of examples today on this panel. There are more also in terms of enabling customer engagement, enabling Salesforce. Do not underestimate that part of the InsurTech universe.
Okay, thank you, Dietmar. Thank you, everybody. That's all we have time for. I found that a very fascinating discussion. We had a great variety of ideas from people with different backgrounds and different businesses. This has been a live broadcast, but it's been recorded and it's going to be uploaded to the Ditto website from tomorrow, I believe, the 13th, that's right, for you to view again if you wish, or to share with your colleagues. Our next spotlight will be on blockchain and financial markets. That's on Wednesday, the 10th of October. So please do join us if you can. The people confirmed so far are Andy Coyne, CEO and co-founder of Cobalt, Richard Crook, head of emerging technology at RBS, and Gareth Mee, partnered in Venica, the IT and consulting practice. If you haven't already received a notification about this spotlight, you should receive one soon, and if not, go to the Ditto website and click on News for details. So that's it. All that remains for me to do is thank you, our listeners, for listening, and to thank our 5 panelists for taking part. So thank you, Dietmar, Elizabeth, Harry, Jeremy, and Rudi. Thank you.